Hey, what's up everybody? It's Randy Wolfe. Real estate investing can make you wealthy, but it can also wipe you out if you're not prepared. And in this video, I'm breaking down the 10 biggest risks in real estate investing and exactly how to avoid them so you can protect your money and you can grow safely. By the end, you'll know the mistakes that take investors down, how to spot them early, and the simple strategies I use to protect every deal I touch. All right, before we get started, be sure if you haven't already subscribed to the channel. I put out brand new content every single week, and if you haven't, check out my private community. I'll put that link in the description below. This is where new and aspiring investors can join and be a part of a fast-growing community where it gives you like the shortcut and the short track on learning how to invest in real estate. All right, risk number one, overpaying for a property. Oh my goodness, this is a biggie. It happens when emotions or a bidding war takes over, and this leads to poor cash flow and oftentimes negative returns. Avoid it like the plague. Always run comps, stick to your numbers, and walk away if it doesn't make sense. I have other videos on this channel that teach you how you can go about estimating repairs and running comps, so be sure to check those out. Risk number two, underestimating repair costs. This is another huge risk. Big time problems if you don't do this right. Rehab projects almost always cost more than what you think. Let me say that again. They almost always cost more than what you anticipate. There's a lot of hidden issues, electrical, plumbing, foundation problems. You need to avoid it. Get multiple contractor bids, and I'd say add anywhere from 10 to 15% of a buffer to your budget to keep you safe. All right, risk number three, bad tenants. Missed rent, property damage, legal headaches. A bad tenant can absolutely crush your profits for months and months and months. You really want to avoid bad tenants. Use strict screening, credit, background, income verifications, references, all of those things. You don't want to skim on this. Risk number four is market downturns. Home values can drop. I mean, typically homes appreciate over time, but with different changing markets and interest rates, they can drop, and rents can sometimes even get stagnant or fall. So that can really hurt your cash flow, and it can really hurt your equity growth as well. So the way you avoid it is you've got to make sure that when you're buying a property that you're going to be holding, you want to buy it for cash flow first, and appreciation is the bonus, but the appreciation is not the plan. When you're getting started, you can't afford to be buying a property that barely breaks even or is negative, just kind of banking on that appreciation, because if you do that and you continue to scale and buy more properties that don't cash flow over time, it's a recipe to get sunk. Here's the thing, most investors lose money not because of one big mistake, but because of several small risks that keep stacking up over time. And so the next few of these could easily be avoided if you know what to look for. Which brings us to risk number five, and that's financing falling through. Lenders backing out at the last minute or terms being changed. All of this can cause you to lose the deal and your deposit. You really want to avoid this. Get pre-approved, maintain your credit, and have a backup lender ready to go. This is why I think it's critical to start building multiple lender relationships, not just relying on one. Risk number six is unexpected maintenance costs. Now, man, this really adds up. So roof leaks, HVAC failures, plumbing backups, emergency repairs can absolutely crush your profits. And you really want to avoid this by keeping a reserve fund. You really want to have at least 3 to 6 months of expenses per property set aside so that inevitably when this sort of stuff happens, you're prepared. Risk number seven is poor property management. So late rent collection, bad communication, legal violations, all of these things can turn a good deal into a bad one really, really fast. You know, property managers can be amazing, but they can also really cost you a lot of money and headaches. So you do want to vet property managers carefully. You want to check for reviews, references, and ask about systems and processes. A good property manager is going to have their systems and processes really, really dialed in. What I would recommend is ask other investors in your area who they're using, what they like, what they don't like, and then kind of get feedback from them when looking for a good property manager. Risk number 8 is vacancy. Empty units equals zero income, but you still have to pay those ongoing expenses. So common, like in these slow markets, this is more common. And also, you know, if you don't have good marketing in place or a good manager, this can really eat into your profits. So price your rental competitively, advertise it well, and maintain good tenant relations. The good news is every single one of these risks has a solution, but these last last two are the ones that can surprise even experienced investors. So stick with me until the end here. Risk number 9 really falls into legal and regulatory changes. You know, rent control laws, zoning changes, tax increases, all of this can impact your profitability overnight. So you really want to stay informed with your local investor groups and adapt your strategy quickly, particularly if you have short-term rentals and that's one of your strategies. A short-term rental can overnight be immediately illegal in a municipality. So you got to stay on top of these legal and regulatory changes. And number 10 is just a lack of exit strategy. You get stuck with a property you can't sell or you can't refinance. This can tie up your capital and ultimately kill your growth. You want to have multiple exit strategies before you buy, sell, refinance, or rent, whatever you're going to do. I would definitely encourage you to check out my BRRRR series of videos. It's the BRRRR Mastery series on this channel. I talk a lot about how you can use the BRRRR method to recycle capital over and over and over. But you need to make sure that you have multiple exit strategies in place, not just counting on one particular thing. Every investment has risks, and the key is to identify it, prepare for it, and protect yourself before signing the contract. You don't need to eliminate risk, you just need to control it. The most successful investors aren't the ones who avoid risk completely, they're the ones who know how to manage it. Now, if you want more in-depth training on how to protect your deals and to build a portfolio that lasts, consider joining my private real estate community. The link is below, and inside you'll get real-world strategies, live Q&A, and a network of investors who've been exactly where you are now. Remember, profits are not necessarily only made when you buy, but they're kept when you manage risk the right way. As always, I appreciate you watching today, and I'll see you in the next video.